how do I move meaningful amounts of money in and out of blockchain without getting in trouble with my bank, without my account getting shut down, funds frozen? In some cases, these payments, which are supposed to be instant, can take longer than Swift because the source of funding is unclear.
Hello, and welcome to Public Key. This is your host, Ian Andrews. Ever wonder why international payments have suddenly gotten so much better? Two words, crypto and stablecoins. Today, we're diving deep into this revolution with someone who's seen it from a fascinating angle. Meet Arnold Lee. He's co-founder and CEO of Sphere Labs. Arnold's journey is pretty unique. He started in the Internet of Things world before pivoting to fintech. And talk about timing. Sphere Labs emerged from the ashes of the FTX collapse and has since become a powerhouse in regions like the Caribbean, Latin America, and the Asia Pacific region. Arnold's going to break down how Sphere is solving major headaches for fintech companies and crypto payment providers who are wrestling with complicated banking systems. We'll also get the inside scoop on SphereNet, their innovative closed-loop ledger that's connecting fintechs in new ways. Plus, he'll introduce us to some game-changing concepts, how auction mechanisms could be the key to unlocking cross-border payments. But before we dive in, I've got to give a shout out to the incredible Chainalysis research team. They've been working overtime to deliver some holiday reading that's actually exciting. They've just dropped a comprehensive guide to cryptocurrency exchange compliance, covering everything from KYC to suspicious activity reporting. It's a must-read for compliance pros and public sector folks alike. And that's not all. We've also released our new Crypto Maturity Journey Report and our industry-leading Geography Report. You'll find links to all these goodies in the show notes. Now, let's hear from Arnold. Today, I'm joined by an amazing guest, Arnold Lee, who is co-founder and CEO of Sphere. Arnold, welcome to the show.
Thanks so much for having me on. I'm excited.
I'm excited to learn about Sphere because it's a topic that you're operating in a space that is really topical right now, which is international payments, using cryptocurrency, using stablecoins. Tell us how you ended up building a company in this space. Let's maybe start the conversation there.
It's a very unexpected rabbit hole because I come from the world of IoT. And so we were working with sensors, everything from concrete curing to solar compactors. And my best friend from college, I've known him for 10 years. The meme I like to use back when he had a full head of hair, it's bright-eyed. He always was interested in finance, so worked in TradFi, asset managers, eventually did some payments at startups. And we had been building on chain a lot of random stuff for a few years at that point. I kept running into this problem of payments and started off with maybe a less ambitious version of cross-border payments, just a checkout page, make it so that people could pay us for the products that we wanted to try out. And, Coinbase Commerce didn't support Solana at the time. Stripe didn't support Solana at the time. We are coming from a Web 2 background. Yeah. So fast, cheap, works, amazing. And so Solana was our home base. And yeah, that ended up becoming a hackathon win for this tool that we had built, starting off as a Stripe for crypto and just kept going into the rabbit hole over time. I suppose that's how we ended up in payments.
And was that your first entree into crypto? Is that where you first encountered it? It was your friends hey, help me figure out this payments problem?
My backstory with crypto is a little strange. I found it when I was quite young, in middle school. My much smarter younger brother and I were trying to figure out ways where we could pay for video games. We had just gotten one of the first iPhones. And so on the bus ride to and from middle school, 45 minutes there, 45 minutes back, we'd fill out these online surveys. Advertisers, maybe a variation of Mechanical Turk. How many times do you drive your Nissan a week? How many times do you exercise?
So you're saying that all of the data collected in those paid surveys is probably unreliable?
No, it's a long time ago, so I don't remember what I put in. But
you've got some middle schoolers faking the data to earn the fee they pay for participating in the study. That's amazing.
It was called freeonlinesurveys.com or something. It was very on point. You get a little bit of Bitcoin, or you could get money via PayPal. And you would get a little bit more Bitcoin, maybe just because it was new and internet money, less worth it, I suppose, than dollars in PayPal. So we just did that for a while. For a few months, we would just fill out these surveys, get a little Bitcoin. I still remember the Bitcoin wallet. You could just download. Very simple. It was send Bitcoin, receive, here's your wallet address. And we were eventually able to buy a month of World of Warcraft. It was amazing. We were very young. Our parents didn't speak English super well. I remember thinking at the time, how do you open a bank account? Do they just steal your money? This is coming off of 07, 08. So it was pretty magical. It felt like maybe YouTube in 2004 or early days of Facebook or IRC chats, just very grassroots. And for some reason, people thought that this coin had value, and it was way more convenient for us to be able to earn money that way versus trying to find jobs as 13-year-olds.
Do you remember what a month of Warcraft cost back then, priced in Bitcoin?
Yeah, so World of Warcraft was $15 a month, and you could get a 2-month card, 60 days, so $30. I don't know how much that was in Bitcoin. I
Okay.
try not to think about it.
I feel like this story is heading down that famous one about the guy who ordered 2 pizzas with Bitcoin in like 2010, and that's now millions of dollars that he spent on pizza.
Somewhere out there on a ThinkPad, there's probably a little Bitcoin left, but we had cleaned out the house for that subscription card. So, the past is construct, right? And so
Yeah. That's amazing. Now, at that point in time, you're still in middle school, obviously, but thinking forward, did crypto seem like an obvious destination for a career or building a company? Because it sounds like after you graduated from university, you were actually maybe more in the green tech world.
not at all. I didn't think Bitcoin was going to make it. Didn't even know what crypto was. To me, it felt like internet game money, like RuneScape Gold or something. There were ways people could use Bitcoin for the years thereafter, just like peer to peer, buy, sell stuff. Ethereum rolls around like 2015, 14 maybe, but for us in college, 15, 16. It wasn't until 2017 where it felt like there was really intense interest from all sorts of big companies, but never really considered a career in crypto. I wanted to be a math professor for a while. Somewhere out there, 16-year-old Arnold is very disappointed, but it's been quite the loop-de-loop, I suppose, of a career journey, and much easier to connect the dots looking backwards for things that captured my interest. But even for Luigi, he definitely never really expected to work in crypto.
Yeah.
We both were just like, oh, this is like a cool technology. Never expected so much capital or like so much talent composing an ecosystem or an industry.
Yeah. Anytime I meet a true believer who's been in crypto for a decade, I'm amazed that they had that much conviction in anything. So I really didn't pay much attention to crypto until I joined Chainalysis in 2021. It wasn't even on my radar. I never had the moment of like, oh yeah, I've cobbled together a few Bitcoin here, when they were worth a few $100s, and missed my window of opportunity. So I want to talk about Sphere. There's a few pieces to the business, it seems like. So there's Sphere Pay, which is available today, Sphere Labs. How does all this fit together? Maybe draw us a little bit of a picture of the structure of the business and where you all see it going.
So Sphere Labs is the entity we incorporated a week after FTX.
Wow. Good timing.
Yeah, our history is one of great timing. And it eventually would stumble from like the Stripe for crypto, raises funds. This is around the regional bank crisis. And Solana, you could count the number of apps that were around, and everyone was worried about survival. And so it was tough to sell like a checkout page. It was like not on the top of anyone's priority list. Turns out that people don't really want to pay with crypto when the number is really down. And we looked around and we're like, what should we do? We just raised money. Our families are thrilled that we're no longer unemployed. Hired some of the smartest people that we knew, and just kept getting weird coincidences where people who are way more successful than us from like the Web 2 world wanted things that we thought were easy. Being able to generate wallets, thinking about different chains and gas, on-chain compliance. How do I know that I won't get in trouble for this? We had known about Chainalysis actually back then, but especially on and off ramp. We thought it was a solved problem because, you could buy stuff on Coinbase, Kraken, pick your favorite central exchange. And yet the conversations that we had, these counterparties were so excited, prospective customers, and they kept coming from the same parts of the world, namely the Caribbean and LATAM. Over time, Asia Pacific. And we decided to build for them because it was a struggle to get anyone else to talk to us, frankly. And that becomes Sphere Pay, which is what we're mostly known for today.
Yeah.
There's ways to pay with crypto, of course, but I'd say the bulk of the business is in facilitating on and off ramp for the purpose of cross-border payments and some more difficult corridors. And we get pretty granular with the bank messaging to help support corridors where the correspondent, a number of active correspondent relationships is low, and hence it's harder to just move money at all, even if you go through Swift in these places. Sphere Labs is the development studio behind Sphere Pay, but we've realized that there are some amazing ways that you can borrow from some ideas in traditional fintech, apply some of the developments in cryptography and distributed systems to create a closed loop that makes it even easier to do this job of on and off ramping. And that's why we make that distinction between Sphere Pay, Sphere Labs, and what we're working on now, which is SphereNet.
Got it. When you first encountered what became your customers for Sphere Pay, what was the problem as they described it to you that you ultimately ended up solving?
Yeah, there are all these different chains. What's the difference between like Optimism and Polygon and Solana? Why do I have to pay gas when on central exchanges I don't have to pay gas to move money between wallets? How do I create sub accounts for my customers? And then simplest yet trickiest one is how do I move meaningful amounts of money in and out of blockchain without getting in trouble with my bank, without my account getting shut down, funds frozen? In some cases, these payments, which are supposed to be instant, can take longer than Swift because the source of funding is unclear, or you're just a company outside of the States trying to interact with dollar accounts, but might not speak, English very well. All of your corporate documentation is not in English. And so the escalation becomes a lot trickier. You would think it's straightforward to, right, like sign up for an account at an exchange or maybe use a service provider to move $500,000, $5 million in a shorter time frame. But it turns out that it is quite tricky because that process of manual escalation on what are traditionally considered higher risk funds movement means that you'll probably run into problems. And we learned that the hard way. At the time, they were just telling us we have trouble finding a consistent on and off ramp provider. We have trouble interacting with blockchains as they exist today. And over time, we realized that there were some stickier, deep rooted issues, as I just described.
And were these folks individuals, like high net worth individuals who were investing in crypto, or were they crypto businesses, or were they just people that were looking to move money of any type internationally from within their country into the US? Like, what was the profile of the folks that you initially encountered as customers?
That was one of the things that made us the most bullish, actually, which is that they weren't Web3 companies at all. They were solidly Web2 fintechs doing things like payment orchestration, invoices, payroll. And because it was such a struggle to utilize traditional rails, they were looking into newer technology like stablecoins. And we're not crypto natives. One recently actually came out to Token 2049 to hang out. And that blew my mind because I never expected to see him at a crypto conference with me.
Yeah.
But the way that I like to describe it is not on CT, would never be at ETH Denver, just normal entrepreneurs trying to build 10x products. And blockchain technology is really interesting to them for that reason. Maybe there's a common thread of fintech, maybe there's a common thread of regionally where they come from, but beyond that, very much different from the people we were used to interfacing with on chain.
And talk to me about the solution that you came up with, because this one of on-ramp, off-ramp, and banking relationships, it's a common thread that I see in almost everybody I talk to who does anything in the world of crypto, is the biggest pain point. I'd love to understand what you and the team hit on that produced a solution.
I think we just really focused on a couple of use cases or a couple of like customer profiles, and then realized that there are structural reasons why it's hard to move money, let alone money involved with stablecoins in and out of local banks. There aren't a ton. All of their correspondent accounts are at these GSIBs or large banks in the United States. And they're in a situation where the bank messaging is set to a default, which actually doesn't provide a lot of information about the transfer. And it starts to make sense that someone sitting in a wire room receives a notification maybe from a dashboard to process this payment. And it's a little suspicious because it's of abnormal size. The fields that you would want to see filled in by default are not. So it's very unclear, right? Like, what's the point of the payment? Like, where does the money originally come from? Is there an associated path, like a destination where the corresponding invoice can corroborate a legitimate cross-border payment? How did we learn that? I suppose found out the hard way. We were trying to support these fintechs. I realized that funds were getting stuck sometimes for weeks, even like months. And in talking to the local sponsor bank and getting lucky with recruiting some folks who had worked at wire rooms for decades, we realized that there was a missing leg where you can really get into the granular fields of, say, an MT103 or an ISO 22 Fedwire, and that the software that the local sponsors were using were not filling out the fields that would actually make a difference when a wire operator in the United States sitting at that large bank receives the payment. It was lucky because you can't really do this easily at scale. It's a lot of like manual coordination, figuring out like what is the best peer-to-peer connectivity. If you have like 4 correspondent accounts as a local sponsor bank, like which one's the fastest?
Yeah.
Which ones you have the best relationship with? Is your bank core built on top of ones maybe? But yeah, in escalating frozen or stuck funds or just slow funds movement, that's how we start to dig in as engineers, I suppose, coming into the banking world because there's a bug in your code, you got to go line by line.
Yeah. And as you're tracing that through the code to find that bug, was the solution that your banking partners had to actually upgrade their software, or was Sphere actually able to replace what they were using to send those wire details? Like, where did the upgrade happen to make the information that was necessary to pass through the GSIB wire room effectively? How did you make that adjustment? That feels hard.
So we were unable to convince any bank to upgrade their software, but we were able to instruct the local sponsor to indicate to their correspondent, hey, I actually have an opinion about, I don't know, like field 1510 in the Fedwire, and I want you to explicitly define the intermediary for me, which is an instruction that a wire room operator in the States like can handle. It's just typically abstracted away by a wrapper software like BBFX or something. And so it wasn't like foreign information per se. It was just something that they don't default towards doing because there's a variety of reasons like liability, like you don't want to be too opinionated when customers are sending you wires. But if you get that manual setup done for a given local sponsor and their correspondent and potentially the receiving bank, they know what these fields are supposed to do, and you're kind of just giving them the consent that, hey, this is the explicit correspondent route that I'd like to take. So it wasn't much of a software change and more of, hey, we just like to be very opinionated about how these funds move and making sure that the local sponsor, especially in countries with weak SWIFT relationships, were brought up to speed in communicating with their correspondent.
Give me a sense of how big that business is for you today. Like, how many countries are you operating in? How many people are using it? Or maybe how much asset value is now passing through your system?
It does about 7-8 figures of daily payments volume, and it's in at least 14 different jurisdictions just within, call it the Americas, LATAM, US, Canada, and there are a couple in Asia that we counterparty against, Southeast Asia, Hong Kong, Singapore, as well as recipients in US, Europe, Switzerland. So a lot of different countries. And the beauty, I suppose, is that because we're dealing with correspondent accounts, we can isolate funds movement down to countries as opposed to having to start over per country.
It's amazing what you built. The question that I've been wondering about is, it feels like a very crowded space, this area of like international money movement. I look at big companies like Ripple. That seems to be the entire focus of their business. And then you've got amazing fintechs like Stripe, who recently have made some pretty big announcements around stablecoin payments being available as a feature in their platform. How do you think about kind of your place in the market and competitive differentiation when you've got the giants are also kind of going after for this problem space, it seems like, and a ton of other startups want to get into the space?
It's a fantastic question. What's interesting is that there's almost like an inherent paradox where the larger you grow, the less it makes sense to do bespoke setups, the less it makes sense to target certain markets. And you now have the resources to really compete for the biggest markets in the world. US, Europe, and LATAM, the big three are Mexico, Brazil, Argentina. If you can leverage those resources to take meaningful share, it's so much more plus EV for you to do that. And hence there's what I describe as a structural deadweight loss, where certain markets, countries with lower GDP, use cases that involve a lot of headaches because maybe there's a lot of nesting. Maybe like in Brazil, met friends who just didn't have IDs. So like, how do you KYC them? As companies get bigger, it becomes harder to justify underwriting some of these different types of use cases. It also starts to make less sense to really spend time in saturating a given individual market until there's a threat of competition from, say, another startup who's trying to take up that share. And so we've started to see regional concentration because laws evolve, customer preferences evolve. And the bottom line is that until agents get good enough, you need people who are really up to speed with local language, communicating with partner banks, communicating with regulatory agencies within that jurisdiction. And if your entity is located somewhere physically, as it has to be currently, and you need people located physically in some country, you're naturally going to just start to develop some edge within that jurisdiction. So going back to your question, where do we see ourselves in that stack? I think we've invested a lot in this corridor of very specifically Asia, LATAM, and the United States. But the tricky part of it is that as you grow, you need to make more money, which always invites attracts a younger startup who like needs to make less money to come in and take your market share. So there seems to be this inherent cycle. And I think where we've really developed our DNA as a team beyond jurisdiction is in interacting with these blockchains, with these ledgers, and noticing that there are some great filters in utilizing these ledgers in terms of monetizing as a business. Stablecoin spreads, as an example, are compressing to zero across the board. And if you shift, maybe as it was the case in traditional fintech for a given currency, towards lending out money, credit lines, pre-funding in order to speed up the latency on payments, you are in some sense doing high risk lending. You're underwriting like the given signals of a jurisdiction, which leads to even more jurisdictional concentration because you're going to understand one country, because you have limited time and limited manpower, better than other places. Part of the endeavor of SphereNet is to give payment companies more paths towards monetization beyond just conversion fees in order for them to be able to more conveniently access this path of, say, underwriting credit or leveraging unique components to blockchains, such as the fact that transactions are compiled into a block and there's value to be captured in the ordering of those transactions within a block. Something that is typically monopolized by really smart people writing really insane bots on chains today, because the end state is really that cycle. You do it really well as a local startup, you grow, you make money, someone comes to challenge your market share, and their bar for making money is lower. So how do you make it so that way, even if you're a very large startup, you can continue to monetize? If you're a younger startup, you have a fair path of distribution. And I think that a blockchain setting is really amazing for these things that are harder to do within the silos of, say, a bunch of different Postgres databases corresponding to fintechs in different countries. I'll TLDR that with, we see ourselves historically as being a US, LATAM, Asia payments provider, really just digging in deep into the B2B use case for certain types of clients. But we are now transitioning towards this alternative form of a ledger, where hopefully this leads to better monetization for everyone by unlocking some of that structural deadweight loss I talked about.
Amazing. It seems like a perfect transition point to maybe unpack what SphereNet is for the audience listening. Maybe we can go there next.
Absolutely. It's a closed loop shared account ledger between fintechs. Fintechs currently don't have a way to directly debit and credit each other. They could use a blockchain, but most don't, because there are these risk vectors on open loop chains. And the idea is for it to be really easy as a fintech to avoid what I like to call the fork in the road. You did well in country A. How do you get to country B? You either take path number one, which is to raise a ton of money and then develop a local operation there. Licenses, manpower, bank relationships. This might work for a company in the developed world, but even then it's really hard. We're an American company. It's millions of dollars to get licensed. There is no like Silicon Valley in like Nicaragua. So how do they scale?
Yeah.
Or path number two, which is you find a good counterparty in a different country. But the nature of finding a counterparty now is really hard because they're not going to give you their Postgres. So you don't know what their true latency is, what their true rates are, what is their funds flow, what is their legal structure. Like they might disclose some of this to you during mutual onboarding, but it makes path number two, as you literally go on Google and schedule a bunch of calls and kind of do like vibe checks and do mutual onboarding and spend months trying to figure out the perfect partner in a new country.
Yep.
Blockchains are really good at coordinating potential adversaries.
Yeah.
And fintechs are used to shared account ledgers that are closed loop. And so the idea is to make path two way easier. So that way, a really awesome fintech in a country that might have historically been considered high risk, or a fintech in America who's more in the Web2 space, has money transmission licenses, but doesn't know where to start in Web3, to give them more objective data. So that way they can make a more qualified risk analysis when deciding whether or not to face off against another regulated fintech who wants to be able to do money transmission where they are licensed. So yeah, that's that.
When you say closed loop, is that a synonym for like a private blockchain, meaning you've only got trusted parties operating on the chain?
Yeah, it is that. It's like a private and permissioned Solana cluster.
And when you describe that counterparties have more data on chain so that they can make a better analysis versus the Zoom call vibe check status quo, like what is that data? What would a user of SphereNet actually be putting on chain besides here's a bunch of assets that I currently control the private keys for?
Yeah, what's amazing is it would be really useful to know everything from how many transactions has someone done in the last year or last month? What is their average time to completion. Like if I know that of your last 99% transactions, you did the fiat component of a stablecoin to fiat cross-border payment. If you did those in under a minute, you must have some pretty good rails.
Yeah.
Or if you provide attestations that are kept hidden, so that way you're still willing to do it, reference a SARS ID, then I know that you have a semblance of a compliance program because you're actively filing these. There's a lot of information that is really hard to post on chain today because chains are public.
Right.
And the account structure is not opinionated on this use case. But if you layer in forms of encryption, of multi-party computation, of zero knowledge proofs, and you hyper optimize the account structure of a chain to this use case of fintechs trying to find each other and selectively reveal information about each other when going through a risk assessment of a counterparty, there is a ton of time that you can save that you would normally have to dig through someone's website, go to their disclosures, read through their terms of service, talk to them, try to get an understanding of their funds flow. And the truth is, you'll never really know if it works until you try to send them a ton of flow, maybe 3 months later. Here, you can get a less trusted version of that. You can know that the max transfer size that they've done is 30 million, that their average ticket is 500K, that there's a latency for their higher transfers that is worse than their lower transfers or not. And nested, right, KYC, how do you pass the KYC of customers that they're moving funds on behalf of? It's all siloed today. I might have one identity vendor, you might have another. You have to bespoke share it with each other or sign a reliance agreement. There is so much trust in this process right now of finding good partners. And you have to do this in all the countries or all the regions where you want to scale. And if a blockchain is very opinionated about that type of information, makes it super convenient to selectively display, to selectively reveal, then it becomes much easier to speed up how quickly you can trust a counterparty because you now have this guarantee that it's not just their word. It's the word of everyone else that they interact with. It's the word of the things that they're attesting to and are on the hook for with their licenses if they ever lie.
I'm trying to piece together how all of that information ends up on chain because they're not necessarily collecting KYC on chain. Like this is something that they're doing in a real world process. How does that data end up represented in a way that then other potential counterparties can validate?
Yeah, that's a great question. So if you and I were the only users, it would make no sense for me to hit an endpoint and hash like a response that I get from some sub or from Persona to post a zero knowledge proof of it. But if there are 100 people and I decide to post this information on chain, it's not just within our bilateral relationship where that information is now useful. The other 98 people can see, oh, wow, Arnold is posting this information properly. I can request a transaction to see some of this information. And this makes me feel a lot more comfortable about onboarding him as a counterparty because he went and made these attestations that he didn't have to.
So if I just walk that process to make sure I understand it. So an individual is attempting to onboard with a participant in SphereNet. They submit some sort of proof of identity, like a passport, maybe some other documents. The entity then takes that, passes it through their KYC provider to like validate the documents are real and that the individual is who they say they are. So they're using something like SumSub. SumSub comes back and says, yep, looks good. Ian is Ian. And then that entity is able to post that Ian is Ian response to the chain, which is then obscured in some way because you're really just posting a hash of the acknowledgement, like the positive acknowledgement you get from your KYC provider, which then everybody else in the ecosystem who's chosen to participate in the chain has the ability to read and validate in some way. And then they know that that entity that validated Ian, they can say, oh yeah, you've also validated these other 1,000 people, like you're actually practicing effective KYC. Very cool. Okay. And then on the fiat to say stablecoin or the on-ramp, off-ramp validation. Like you talked a lot about speed of transfer being a key metric when you're looking at counterparties in a given country and understanding variations between small and large payments. How does that data get on chain? Because again, it feels like maybe some portion of it could be on chain. You're moving stablecoins around, but the other half of it, which is what you're actually trying to validate, is the conversion happens in the real world.
It's a great question. And it's relevant to what we were talking about a little bit before. Currently, Luckily, very few cross-border payments are truly atomic. If you send me money internationally, most likely I have money sitting in my country that I'm going to send in anticipation of your money hitting. And then I'll do that internal balancing thereafter. So you can think of this as high-risk lending, because I hope your money comes to me because I'm immediately sending the corresponding amount out. But that time value is essentially risk. And that's where I can make money because there is a fundamental unit that is valuable here, which is I'm taking inventory risk on your behalf. SphereNet, we anticipate, works the same way. Fintechs are already used to holding float, having credit lines with various counterparties, and sending out money immediately. If you look at companies like Wise, AirWallex, Ripple, I assume, does the same thing, Revolut, they essentially have local nodes in all of the countries where they operate. They send out money immediately. Their counterparty risk is quite low because they're facing off against themselves. And then they are doing internal reconciliation between all these different bank accounts. The idea here is to take that obligation, which is traditionally on one provider, to make it competitive. If there are 100 fintechs in a given country and you auction off the right to provide this flow, then the most competitive fintech will win and will be able to service that flow. And if no one wants to compete for that flow, it's money on the table that someone who is licensed there can come and take, and they get to make money off of it. To us, is a form of how blockchains can make this process that currently is the backbone of cross-border payments today a lot more efficient, because you are delegating the responsibility for fulfillment to a local expert. And within each local financial rail, there's a notion of a receipt, a reference ID, that you can create a zero-knowledge proof of and post on-chain. Because I suppose you could think of this as a fundamental long on local rails getting really good. RTPs are going to proliferate even more, but it's really difficult to imagine a global RTP because you have sovereign interests competing against each other. Capital flight is a risk. And while you can make local systems essentially instantaneous because there's a central bank as the ultimate underwriter, fintechs currently don't have a way to balance these different RTP systems against each other without paying a central vendor. Idea here is to give them no central vendor. This is entirely credibly neutral. You know that you don't have to pay money. That is the bottom line for some company else or some other company. You get the most efficient market outcome when you want to service flow or you want to send flow somewhere else.
This auction mechanism is fascinating to me. It seems like you need a fairly significant number of market participants to make it work. Do you have that today? Describe the current status of SphereNet. Where is it in its development cycle?
Yeah, so we have the permission cluster done. Right now, we're figuring out which version of cryptography should we go for. V4, which is very intense, has hardware acceleration, adaptations of, it's not generic FHE, but it's like a partial, like good enough FHE, which opens up product use cases versus like V0. Like what are we going to ship in the next 6 to 12 months? There are 19 different fintechs who are signed up, money services businesses, VASPs, broker-dealers. And the beauty is you're totally right. For a global version, for one that is a 10,000x on what exists today, you need fintechs everywhere. But to solve cold start, you just need one licensed entity to be willing to service the flow.
Got it.
And the most important corridor is the dollar corridor. So you need one licensed entity in the US willing to help solve cold start, because opening up US rails, there are a ton of people who are interested in that and just have difficulty maybe speaking English or doing the sourcing, the discovery themselves.
Yeah. Give me a sense of what it costs. So once I decide I want to send a transaction and leverage this auction mechanism, like what should I expect in terms of fee structure? Because I'm assuming I'm paying each leg of the transfer. There's some value there, even if it's competitive because you've got maybe multiple parties bidding in order to win the transaction. And maybe contrast that to the status quo. Like what would happen, if this didn't exist and you were using just traditional system today?
The beauty is that it's Pareto efficient, because in the traditional system, you are implicitly getting the best quote plus whatever take rate that the provider has on top. They might aggregate liquidity providers, other fintechs in different jurisdictions. You're essentially paying for the cost of them integrating, maintaining those integrations, doing the sourcing and discovery, and then also whatever they can charge for extra revenue on top. The beauty of using SphereNet instead is that because because we defer local obligations to local licensed entities, what goes into the input price from like an economics POV of completing this payment is no longer on a single company. So that company doesn't have to pay for a local entity that now also has to be compliant with its general compliance policies, local manpower, so that way that entity has to communicate with all the other entities. Cost of capital, it's no longer just one company who has to pay for the initial pool within a new country or pay to interface with a liquidity provider in a new country. And instead, is dividing that work up. So stablecoin spreads are pretty low today. We will be an early participant through our US entity and will provide a fairly competitive base rate to help prove out the concept. But because you just need to be a regulated entity hitting REST endpoints to use the network, if someone wanted to create a very competitive product, then they would just have to plug in and they could undercut whoever is currently providing that rate and have alternative paths to monetization that are much harder when you just have bespoke peer-to-peer channels between fintechs and it's not kept in one place.
Yeah, amazing. I'm curious, what does it look like if I want to onboard? So I've got a local MSB license in a country and I'm listening to the podcast and I say, wow, this sounds amazing. Like what Arnold's built is exactly what I've been dreaming of forever. What do I do next?
So there's a path towards onboarding decentralization. Initially, a foundation entity will help facilitate a lot of the onboarding. And if this sounds exciting to you, the prospect of not needing to do discovery, foreign entity setup, maintenance of integrations, and alternatives in the traditional world are maybe expensive because they need to make money too. Please feel free to reach out. We have Twitter, email, LinkedIn, WhatsApp, Telegram, and we'd love to involve you as an early partner on helping us both design V0 versus V4 and thinking about which corridors to focus on first. Because a key component is making it as easy as possible to onboard by embedding as much commercially reasonable compliance logic that you can more programmatically. So it would just be reaching out, getting in touch, and then letting us know what would make the integration process for you as easy as possible.
Amazing. My customary closing question is always, what should we look forward to in the future? What's coming up next?
Well, we will release more information about SphereNet, and the existing business SpherePay will just continue to grow. We're very avid chain customers. Our bill this year was more than expected because we're fairly rigorous about running chain on essentially everything. So there'll just be more product updates both on SpherePay and SphereNet, as well as thinking about some of the news that's happened over the last year. I really love Chain's reports, everything from like the Global Crypto Adoption Index, thinking about financial crime. And we're planning on doing some similar things just for more, I guess, lower level events on blockchains, like thinking about block building, block proposing, who are your counterparties. If you really get down to the first principles of using a blockchain, it's just a matter of time because it is physically what is happening before more people become aware of these topics. And so we'd love to contribute to that discussion.
Fantastic. Arnold, this has been such an exciting conversation. I love what you're building and can't wait to see more of it come to life. Thank you for joining us.
Thanks so much for hosting and excited to see what everyone thinks about this next step for us.
Absolutely. Wow, what an awesome conversation with Arnold. His insights into stablecoin usage across Latin America, the Caribbean, and the Asia Pacific regions really show how crypto is transforming global finance. You know, it's interesting, 2024 has been a landmark year for crypto going mainstream. I mean, when Jim Cramer on Mad Money is telling people to buy Bitcoin, you know times have changed. But here's something fascinating we've been tracking. Let's talk about Japan for a moment. While they've managed to keep their exposure to illicit crypto activities pretty low, we're talking sanctioned entities, darknet markets, and ransomware, they're not entirely in the clear. Our latest research dives into two critical issues facing Japan's crypto scene: money laundering and scams. Want to see exactly how crypto criminals are operating in Japan? Our teams put together an eye-opening analysis with some incredible visualizations that track these patterns. You'll find the full blog in our show notes. Trust me, it's worth checking out. Thanks for tuning into Public Key. Keep exploring the future of finance with us.